Unfortunately, Tuesday was not as good as Monday. U.S. equity futures climbed as corporate earnings surprised to the upside and returning appetite for riskier growth stocks fueled a rally in Tesla. Bonds sank in the wake of reports that it showed accelerated inflation in France and Spain. Bonds fell, pushing key yields in Germany to 15-year high as evidence mounted that a year's worth of central bank hikes have yet to rein in inflation. Kind of like here. Treasury yields advanced with the 10-year benchmark climbing 3 basis points, but opening still under the 4% threshold. Consumer confidence declined in February, according to the Conference Board. Home prices fell 0.1% in December, according to the FHFA House Price Index. For the year, home prices rose 8.4%, which can generate plenty of wealth. You can see a pretty wide skew in the regions, though. The top performing regions during the pandemic, West and Mountain States, are bringing up the rear, while Florida and Southeast are the leaders. Case-Shiller Home Price Index showed a bigger slowdown in December, with the index falling 0.8%. Prices fell in all 20 major cities in December, with a median decline of 1.1%. Moreover, for all 20 cities, year-over-year gains in December, median of 4.4%, were lower than those in November, median 6.4%. We noted last month that home prices in San Francisco had fallen on a year-over-year basis. San Francisco's decline worsened in December, 4.2% year-over-year. Its West Coast neighbors, Seattle at negative 1.8 and Portland negative 1.1, once again form the bottom of the league table. There's a lot of political, socioeconomic things going on in those markets that can have a whole lot to do with that. I'm just saying. Apartment List reported that rents rose 0.3% in February and now up 3% year over year. Home and rental prices have been significantly decelerating and have shown declines in some markets, though we need this to kind of help our inflation problems. We need all this stuff to kind of go down, unfortunately, in order to help inflation. The 5.5 ended up being down 14 basis points on the day at 99.66, which puts us right around these two bottom lines that are both floors and ceilings and floor. It looked like we tested that 99.845 Fibonacci today, but it failed. We also got news that the Supreme Court on Monday agreed to hear a challenge that threatens to hobble the CFPB. At issue is the way Congress set up the Consumer Finance Protection Bureau. Instead of relying on annual spending legislation like other agencies, the CFPB is funded directly by the Federal Reserve, meaning they don't really have any oversight. A while back, Ed Groshans with Compass Point Research and Trading addressed the potential outcomes. Basically said the Supreme Court can hear this case and rule in the CFPB's favor is constitutional. This outcome would have really no bearing on it. Or if they hear it and they concur with the Fifth Circuit Court opinion, in this scenario, we expect the CFPB would cease its operations. I'll say it again. Cease its operations at such time that it receives appropriated funds from Congress. If this opinion is issued in June, we expect the CFPB activities to be halted until December 27. Wow. Meanwhile, the CFPB permanently banned RMK Financial Corporation, which does business as Majestic Home Loans, from the mortgage lending industry. So they took away their ability to even do lending because they repeatedly ignored their instructions to stop deceiving veteran borrowers. Yeah, you should probably listen after the first, second, or third warning. Yeah, you get shut down. Also, from our sponsor at WellThatMakesSense.com, this is all about producing clients, producing leads off of the internet. There is a definable process to cultivating these customers. To be able to convert someone from going about their life to wanting to do business with you will require building an invisible selling machine. This series of posts is all about creating an invisible selling machine so that you can generate clients off of the internet.